Namaste and welcome to another edition of the Bharatvaarta podcast. We have Mohal and Nirav on the podcast to discuss the end of the US dollar as the reserve currency. Well, it sounds provocative, but recent geopolitical events like the Russian invasion of Ukraine has made it quite a possibility, one that at least must be discussed, right? So before we begin, let me quickly introduce our guests, both of whom have appeared on multiple podcasts earlier. Mohal Joshi is a columnist and podcaster with the India Rising podcast. He's interested in geopolitics, defense, politics, and macroeconomics. Welcome to the show, Mohal. Thank you so much for making the time. We also have Nirav Kanodra, who is an investment banker based out of Singapore with extensive experience in sales and trading. Nirav is also a regular on the weekly, and he's appeared on multiple economy related podcasts on Bharatvaarta. Welcome back, Nirav.
Thanks, Carrie. Thanks for having me.
All right, so this is a very interesting topic, and there's plenty of ground to cover. So, Mohal, let me come to you first. We'll begin with a little bit of context, right? What is the need for a reserve currency, and could you take us back in time and explain maybe how some of these things came to be?
Yeah, so today, like as we know that all of most of the world's trade is conducted in terms of US dollars. So the beginning of the genesis of this beginning was post World War II. So in 1944, when World War II was about to end, there was a meeting in Bretton Woods, New Hampshire, USA, where like around 44 countries decided to meet up on the future of the reserve currency. So at that time, the monetary system, they had to decide what should be the thing. I mean, before pre-war, if I'm not wrong, the British pound was like kind of the reserve currency status. So what they decided in this was that member currencies would peg their currency to the US dollar at a fixed rate, and the US dollar would be pegged to the gold, because everybody was around that time on the gold standard, which they are not, which we can talk later on, at a fixed price of $35 per an ounce.
The whole Bretton Woods system, right? I mean, how long did it last, and when did the new system, petrodollar system, emerge? Nirav, maybe you can talk about this.
Yeah.
Also, if you could talk about some of the consequences resulting from that, that will be helpful.
So see what happened is, so earlier, if you go back, like even though while bulk of global trade happened in like British pound, what happened was that every two countries needed to have like a balanced trade. Otherwise, whatever you imported, you did not want the other country's currency, right? And so if you imported from one country, you wanted to export roughly equal amount, so that there is a balanced trade between each of the counterparty. So after Bretton Woods, what happened is that everybody said, okay, given that the US dollar is pegged to gold, I can always have a little bit excess of US dollars sitting in my bank account. So it has got this trust in the system. And this lasted from 44 to 71. So in 1971, when Nixon was the president, so US was facing some like an inflation shock. And you already had the war in Israel, the Yom Kippur War had happened. There was an oil price shock, the first oil shock. Nixon said that he broke the peg from gold, right? He said that dollar was a freely floating currency. The value of the dollar is the value of taxes that it can collect, and the nation's interest to kind of protect the value of the dollar, right? But what that happened is you saw 30% fall in the value of US dollar versus gold, and correspondingly with other major currencies as well, which actually led like to even more inflation in the US. So at this point, a lot of the big shock and after was due to oil imports, and in the US, in Texas, oil production has started declining. US was till 60s was actually balanced on oil trade, but now it had to import from the Middle East. So what was brokered was the petrodollar system, where they said that the global trade of oil will happen in US dollars because that's the most important commodity. And all the GCC nations, so it started with the six GCC nations, the Gulf Cooperation Council, they will peg their currency to the US dollar, and which lasts till today. Any excess money which they have, they can always park it in dollars, even if not with an American bank, because dollar is freely traded. At that time, they parked their money with banks in London, which gave rise to the London interbank offer rate, LIBOR. Later on, there were more scandals, etc. So this is how they ensured that anybody who wants to do any sort of global trade, they will continue to do it in US dollars. So, for example, India is buying oil from Russia, but still the amount settled was in dollars, for example, right? Oil being the single biggest, the most important commodity, and being the feedstock for like plastics and almost all of the global manufacturing economy, this kind of set up the standard. and this allowed US the privilege that it can print more amount of its currency with which it can import almost anything that it doesn't have. And for this to succeed, what has happened is that the US trade deficit has risen massively. So because of this, given that US is exporting, other countries have to keep some balance in US dollars, some spare balance in US dollars for any fluctuations in trade or for their expected imports. So US needs to supply that. So that means US needs to import more of other goods in, right? That is what has happened. And this system has lasted quite well till now. Everybody felt, including Russia or China or even Afghanistan, etc., right, that they can always keep spare US dollars in US treasuries, either with the Federal Reserve Bank of New York or with even like European banks or like British banks in London, right? And whenever required, those balances could be converted to the goods imports, whatever they wanted to import then, right? And the advantage of the system is, for example, if say India imports some manufactured goods from China, India imports say coking coal from Australia, India imports oil from Middle East. In a different scenario, if we did not have like the US dollar standards, what we would have to do is maintain currency accounts in each of these, or if we use Indian rupee to pay for it, then the other country need to use that Indian rupee to buy Indian made goods or Indian assets. And so the trade needs to be exactly balanced between each two counterparties, right? Which sometimes becomes like a little suboptimal. When you've got like one currency, it's okay because, say, for example, Middle East is selling oil to India but buying cars from Japan, for example, right? So you don't need to have like different currencies and convert. All global trade is done in dollars, so that kind of has you can say it's the grease in the wheels, all the gears of the global trade movement. So it's kind of facilitated it. It's worked quite fine for now. So what was the issues? You said like when US got upset with someone. So you can take example of Iran or Venezuela or Sudan. With these countries, they said that if anybody, or later even Iraq after Saddam Hussein, you cannot transact in US dollars, or any other entity is transacting with them, then they get sanctioned as well. So those are secondary sanctions. So now what it does is this US has the unique privilege of enforcing sanctions on others to use its currency. And that kind of makes it a pariah state that they cannot really transact with others. You can see South Africa had softer sanctions in the apartheid era, where for them they had like a little bit softer sanctions. So they kind of had to rely a lot more on their coal and the commodities that they could have domestically itself, right? But after the US dollar sanctions, which have been hit, it has crippled kind of countries, especially like you can say Venezuela and Sudan. Sudan actually then after that split into South Sudan as well. Iran has been very much more resilient because of black market channels or because of some allies who import Iranian oil and then blend it with somewhere else and then transfer it elsewhere. So Iran has the commodity which the rest of the world wants so much that the sanctions have been a little bit softer. I think similar things are happening with Russia as well. So just if I briefly just mention the current episode, what has happened is that Russia, there are a lot of sanctions for them. One is to use US dollars. Russian assets, Russian reserves of the Central Bank of Russia have been seized. And now it is very difficult for Russians to import other things. So counterintuitively, what has happened is the Russian ruble is actually strengthened a lot because Russia still sells oil and gas to Europe. And Russia still sells oil to India and China, even if it has a 30% discount. Russians can't buy foreign goods easily. So what has happened is that Russia continues to export oil, but now it cannot import. And earlier, like say what the Middle Eastern countries did, that it did not allow their currency. When you export a lot more, you don't allow your currency to rise a lot more. What you do is you use that surplus and build a sovereign wealth fund. So Norway does it. You have the Middle Eastern countries which did it because if you didn't do it, the other example is Dutch disease. So what happened is in Netherlands, once you saw a little bit of oil and gas found, compared to UK and Germany, you can say like, or even France, Netherlands deindustrialized a lot because oil price rose. The then currency Dutch guilder rose so much, and it took out sucked resources in terms of manpower, in terms of bank lending, etc. That it was more profitable to be in the oil business rather than any other business. So that's why Germany has a car industry, France has Renault, a little bit of a car industry, other manufacturing industries. UK had one. If you don't keep your currency pegged, it can lead to a very stronger currency which can have other side effects, right? So that's the other thing. So what has happened is you have this whole global currency system. It has worked fine so far. Yes, now people are questioning whether this will continue. Given that you had to have the characteristics of a global reserve currency, you had to have like one person who's the most dominant trade partner with everyone and who's willing to run a large trade deficit. So I think these are the two characteristics. US performed that quite well so far. So yes. So now if things change, and we'll talk about it as it goes later, we could have a completely different scenario.
So, Mohal, Nirav mentioned some of it, right? If we cut to the present, we're almost, I think, 80 days or so into the Russian invasion of Ukraine. The West responded with sanctions, including freezing about $600 billion of assets and then
Mhm.
banning Russia from the SWIFT network and so on. Russia has then adopted ruble and yuan for all of its transactions, right? What do you think is the larger significance of this? What impact do you think will cause on the whole perception of dollar as a reserve currency itself?
Yeah, see, like I think as Nero mentioned that many nations in the past have been sanctioned from the US system. I mean, the dollar system, including the SWIFT sanctions. But what was unprecedented with this one was freezing of the Russian Central Reserve assets. I mean, that was an unprecedented. I mean, if you look at it, like other nations have not faced this issue before. I mean, most nations, I mean, due to their trade surpluses, they're usually with the stability of the dollar. I mean, many of these have like very widely fluctuating currencies, so they don't want to park their hard-earned trade surpluses in a fluctuating currency other than the US dollar, because they see that the US dollar is the strongest currency. The thinking was always that okay, let's park it with the US. I mean, US is never going to default. I mean, the other thing is like US is always sort of like good for its money. It's never going to default on its credit per se. So they wanted to park their money with the US in US treasuries and stuff. So now if other countries, let's say like who are inimical to US or opposed to US, like China, I mean China, there were like recent reports that the Chinese internal, like the bank and the Communist Party have been started talking about how to protect themselves from future sanctions. So like even like an India, I mean India has good relation with the US, but let's say if tomorrow relationships take a nosedive, or any other country, they would have to think a little bit like that there was no risk involved earlier, but now what if they are not aligned with the US on a particular geostrategic or a political interest? Could that be the reason to freeze their assets? So they will have to think more. I mean, interestingly, like even Wall Street Journal like had in its recent op-ed said that if Russian currency reserves aren't real money, the world is in for a shock. So this has caused like a lot of rethinking in many capitals around the world, that what to do with the trade surpluses. Like, should it be parked in US treasuries or could be done I mean, as you rightly mentioned, I mean, interestingly, the best performing currency against the US dollar has been the ruble. I mean, obviously they can't import anything, as Nero mentioned. That has a lot of consequences. I mean, also in Russia, like the local citizens, they are prevented from converting their dollars or whatever foreign currency have into ruble. So obviously leads to a certain extent. I mean, India, like I mean, to its India extent, like we have been talking about the rupee ruble pair to avoid like the CATSA sanctions, like with the S-400 imports and stuff like that. So and I think even Saudi Arabia, they are talked about purchasing some, oh sorry, selling some oil to China in the Yuan. So there are like small, I mean, there's no like major shift today, but I mean, there are like small, like minor shifts here and there, which could have large consequences if it follows down the same path, obviously.
Just a follow up on that, right? I mean, now Russia obviously has huge exports, right? I mean, probably the second or third largest commodity
Hmm.
exporter in the world. Now, with the ruble, at all time highs, how does that impact the economy? Because wouldn't that be adverse for them?
I mean, right now, I think the oil and gas trade is like what keeps the economy running. I think like most other exports are, and also like little bit of uranium. I mean, like interestingly, like US has banned Russian oil imports, but because US gets so much of its electricity from nuclear plants, and around interestingly, like they import 1 billion of uranium. So while they might be preaching the India about like not importing oil, interestingly, the uranium imports are not banned in the US. So it's kind of like there are a lot of holes in the sanctions. Anyways, coming back to the Russian point, that the I think like they wouldn't matter like unless it strengthens far too much, because that's what keeps the economy running, the oil and imports. I mean, interestingly, what they have been asking the Europeans to do is like to, I mean, they had made the request to pay them in rubles, but it's kind of in between solution where with their Gazprom, which is a major natural gas supplier, the foreign creditors deposit the money in euro or dollars, and Gazprom then converts it to rubles before depositing in the final account. So that's kind of interesting, where the Europeans say, hey, you know what, I just paid in ruble, I mean, I paid in euro and dollars, so like I'm not going to be sanctioned while the Russian says, okay, I was paid in rubles. So those are like kind of interesting like observations that I saw like happening over the last few months, where both sides are kind of calling it as a win that, but I mean, in the end, they are converting it to rubles, and that could account for like the ruble strengthening a lot. But yeah, in the long run, I mean, nobody knows how this plays out. I mean, but for now, at least the US thinking that, okay, we will hyperinflate the Russian ruble out of existence has been averted, and a crisis has been averted for now.
So, Nirav, you think more and more countries will start thinking this way, that they would want to move away from US treasuries? We've seen China divest a little bit as well, right? Or more than a fair bit. And also, if you could talk about, what India's strategy has been itself on that perspective.
So see, now the thing is, if you are, for example, like a Saudi prince, or if you are China, right? If you are like any of the other, the petro states or the Central Asian countries, right? Who are not always aligned with the US on everything. For example, India as well. India had gotten like not such severe sanctions, but India got like minor sanctions after Pokhran blast as well, right? So what happens is then the worry is that US has been very quick with Russia. There's not been like a debate in Parliament. There's no, or as they call the Senate and the House. There's not been any sort of like thought which went through any sort of discussion. It's been very quick, been very abrupt. So there are two things. One is, for if you look at all the Russian oligarchs, all the ones who took their money out, their money is all seized. Your football clubs, your yachts, everything else what you had outside, your property outside. Oh, you're friends with Putin. All the ones who had money inside, they're all partying, or their life is kind of similar, right, as what it was before. So this is telling you one thing, that if your country, or if you're like friends or crony capitalists, this has not happened, say, with Saudi with the murder of, say, Jamal Khashoggi. But in the future, if something similar happens, right, you would be worried that can my assets be seized, right? So here, all our paper money, or actually it's not paper, most of it is electronic. All our electronic money operates on the ledger system, that my asset is somebody else's liability. So either I buy US government debt, which is US government's liability, or I put in a bank deposit, right? So now it is a bank's liability to pay me. Then the bank can lend that money on to someone else, right? This kind of system can be seized. So this is what you would call as inside money, in the money inside the system. Gold, for an example, for a lot of other flaws that it is outside money. If I have gold in my vault, I have it, I can transfer it, transport it, or whatever, and that money is my money. You cannot seize that easily. So you can stop buying it from me. You can tell other people not to buy or trade with me, but you cannot seize my money, right? So that is one thing. So one aspect is that you might see a lot of countries move away from the dollar to probably the gold, right? Second thing is, you look at like countries like Japan, South Korea, etc. They export a lot more than what they import, right? They're like Taiwan as well. Small population, their domestic consumption is very small. They export a lot. They keep their currencies weak enough so that they don't have the concept of the Dutch disease. So if they export more than they import, what do they do with the surplus funds? Is that they keep reserves in like US treasuries or some British pound or euro government bond. All of these Western assets can probably be seized. So now you might think, let's say I'm a Saudi prince, and what do I think? So the worry right now is that if you go to the biggest, now the world's biggest trading country is actually China, right? It's kind of compared to the US, with each country bilaterally, probably China has higher trade. And you say, oh, can I use the Chinese renminbi, Chinese yuan, as a huge chunk of my reserves? And then you might get worried that US has started acting in bad faith right now, but like China also could do it. And there is a less of a precedent of them being fair and keeping the rule of law. See, why do all these guys buy property in the West? Because, or buy Western assets, is because there is rule of law. Earlier, they could not be seized. If you had some trouble in your country, you could run away to these places, and you could live there in those fancy apartments and have cars and yachts, whatever. And this was, you did not care about return on capital, you just wanted safety, your return of capital, right? That is what it was. And now this has been broken. If you assume that all of the European nations, West, is kind of aligned with the US, right? Then there is no real other similar safe asset. That is one big dilemma. And then countries, as I said, like Japan, South Korea, and Taiwan, those countries have already kind of given up their geostrategic policy to the US. They all have like US army bases, so Air Force and Navy bases, right? So they are kind of aligned. So they say, okay, fine, we will continue on this path. But this worry is there. Second thing, what might happen is at this time you might feel that I don't mind my currency strengthening a bit. I don't mind spending my reserves a bit. So I rather spend it, rather be popular amongst my citizens, or try and keep it domestically rather than the West. Same thing I would say is with like crony capitalists, say in China. So, like for example, you saw the whole Huawei scandal, right? A lot of Chinese buy a property in Vancouver, in Sydney. They were already smart of not buying in the US earlier. You did not see that much Chinese crony capitalist money buying up a lot of things in the US. They were already worried. And I'm not talking about like middle class or upper middle class rich Chinese, right? These are the very big elites who control a lot of power, have a lot of influence with the Communist Party leaders. So they were all buying property in other Western countries. Similarly, you saw Russians, oligarchs didn't buy a lot of property in the US because they were worried about sanctions earlier as well. They bought it in London. But now even those are not immune, right? So there will be this sort of a rethink that not just from central banks, it'll also be from elite, or what I call crony capitalists, right? Who are like very rich just because of them being close to the policy makers, and they are like rent seeking businesses, and so they will try and keep their money domestically. There isn't a hedge by keeping your money overseas. So if you're like an Indonesian guy, say before like one party changes, a lot of times the crony capitalists get sent to prison, right? And their assets get seized domestically. So that's why they kept it overseas. So now I think all those concerns are there. But what I would say is that up till now there is no real alternative, right? We'll talk about like the alternatives there. Each of them has some sort of a problem. So for money, you need it to be stable. You need it to be easily transferable. So it is a store of value. It's a medium of exchange, and also it has to be kind of easily divisible, that you can buy and sell even in very small units, right? What the US dollar kind of gave to the world, it is quite unique, and so that was quite advantageous almost for everyone. And then last thing I want to talk about is countries with who have capital control. So India is one of them, right? That India does not allow others to freely transact the rupee, etc. So India can't even invoice all its trade in rupee, right? So you need some other format. You want your central bank to avoid, like say, sort of capital flight in times of stress. So you want to control those kind of things. This could be done easily in the or in the current regime. Now if we flip over and have something else, or a multipolar world, etc., all these things become a little more difficult. But yeah, so there is no easy answer. You can say, yes, is the system stressed or are people worried? Definitely. I would say India as well, right? Because say tomorrow there is a conflict, say with Pakistan or with China or something, and at that time the US politicians take one view on it, right? As they have taken in the past on, say, the Kashmir issue or whatever. And then you have the threat of sanctions, you have the threat of your reserves being seized. So absolutely, you need to try and figure out what other leverage do you have, or some other leverage where you can try and blunt those things. I think that's the angle that people will think on. So rather than just diversification of reserves.
I'd love to come to the larger China question with Mohal. But before that, Nirav, I mean, what do you think of the recent strategy for India itself? I mean, we built up our forex reserves, and now, I mean, if you see in recent months, it's dropped, right? What is the thinking behind that?
No, no. So I think that is completely what we did is we played it very prudently. We've learned from like the previous crises. So what happens is in a crisis, sometimes your domestic demand collapses a lot, and at that time, as I said, like your India's exports were IT services, where you could work from home and sell stuff abroad, and you're keeping on getting billed. Sells like India in a way kind of where dollar inflows come in was through direct investments in like startups, etc., right? And that time you saw like Facebook and everybody else invest a lot in geo, so you had like a good amount of FDI, you had a good amount of exports, services exports. But because everything was locked down, we needed less fuel, we were importing less goods, right? So, and people had like kind of a fear of uncertainty. How long will this go on? So what happened is from like a trade deficit, we went to like a flat trade. What RBI did is did not allow the rupee to strengthen, and they used the same East Asian mercantilist policy, or the Middle Eastern policy, that if we are kind of exporting more or importing less, the spare money we'll just keep it and expand our reserves. But that is what you stocked up for a rainy day. Because of this, the world opening up, Russia Ukraine crisis, all commodity prices have gone through the roof, and India being a major importer of oil, what India has done is that they've let those reserves run down. And both sides, you did not let the rupee strengthen too much, because then it hurts other exports like IT services, but now you don't want it to weaken too much either. So you're kind of on the band. That's what they've been doing. So they're not trying to like diversify away from the US dollar, right? I think India is not yet in that camp. India is not as vulnerable. India is not going to most probably strike the first offensive in any war. If anything, it's going to be some sort of a retaliation where in the UN, India might kind of have a justification. But though this tells you that there may or may not be logic then. And second thing is, I think India is in a quite a sweet spot because the world is kind of like worried about China. So they want India as an ally, either via the Quad, etc. So they want India as an ally so that India is very unlikely to get sanctioned. So I think India is pretty safe here.
Mohal, let's talk about China. What do you make of the chances of yuan emerging as a reserve currency? I mean, if you see recent actions, right? I mean, for example, China has asked all of its elites to shed their overseas assets and so on. They seem to be preparing for something, right? I mean, one can only speculate what that is,
Can
right?
I say an island east of China?
Of course. Yeah. So, is this reserve currency even a possibility with the yuan? The other nuance is also, I mean, the huge manufacturing base that they have, the large export economy that they have, right? I mean, it won't even be viable for them to sort of let the yuan strengthen beyond a certain point, right? So, yeah, I mean, the China question, what do you make of it?
Yeah, see, like over the if you like to look at the historical trend, at certain times, like the Spain has been the default had the default reserve currency. Then it's been Netherlands, France, UK with the pound, and then US currently. Now the if you look at the average, I mean, it doesn't mean that it has to be always 80 years. It's been around 80 years. So I mean, US is getting up there in age, the US dollar. So some say, okay, this could be like we're getting to the mean. It doesn't mean it happens overnight, but that like somebody, the next global superpower could be having the reserve currency status. So like many people foresee in this current G2 world, as they call it, like the next global superpower is China. So like the theory is like, could China have yuan as a superpower? But like I think there are some questions and holes in the theory that could China or yuan be the next global reserve currency. So like once is like the first is the Triffin dilemma. So what happened is like with the US, it ran a current account deficit because there's always a high need for dollars for people to do transaction. Now what happened as a result is the US dollar strengthened quite a bit or always stays strong comparative to the other currencies. Now what they did, it led to the hollowing out of manufacturing in US because it just became uncompetitive to manufacture in the US. And like after the Chinese entered the WTO, like a lot of the manufacturing just simply went overseas or maybe even to like Mexico to the south. So like let's say if China wanted to become the reserve currency, I mean obviously there would be a huge demand for yuan because everybody needed yuan to settle trade with each other. So that would just make that they would suffer a lot because I mean then their exports would become uncompetitive. I mean like even like look at today. I mean today like I mean this is I'm going on a tangent here, but like the Japanese yen has like depreciated like 10% or actually 15% since September. So what that is like makes there's a concern within China that now the Japanese exports will become competitive just compared to the yuan. Now like the thing is like I mean this is not even a like if this they are so concerned with the yuan, I mean like they are depreciating sorry appreciating versus the yen, which is the Japanese currency. Like imagine if this was a reserve currency, it would be a many-fold increase. So there is a lot of concern that like if they could be hit with the Triffindel. I mean, China had this sweet spot that that they could export to rest of the world. They could artificially keep their currency weak, and they could take advantage of the US being the reserve currency, where they would hollow out the US, but they would also earn a lot of surpluses or create a lot of surpluses with their trade. So that would be a big problem of like that what they're benefiting from now. I mean, will they be hit with the same issue in the future? Now also remember that today China has like a adversarial relationship with US, which forces a symbiotic relationship with Russia. But I mean remember like in 1916, I mean I'm going a little bit into history, they fought a military skirmish in over the border between Russia and China. So Russia and China were not always friends. China from time to time, I mean because of their over expanding ambitions, they always remind Russia that they are supposedly during the 150 years of humiliation, like Russia sees like around area near Vladivostok and in the Far East. So they have designed. So today, like they might be friends, but in the future, like so, like Russia might not want to like fully go to the yuan in the future. I mean, also in China is like I mean territorial disputes are probably every of its like dozen odd neighbors. Right? I mean, you can count Vietnam, South Korea, Japan, India.
If I may interject, China has, I think, borders with 18 countries and disputes with 20. Like even with
Yeah, yeah,
countries that are
something.
like far away,
Yeah, yeah.
so with Philippines and Malaysia, also some islands, right? So like, yeah,
Yeah, that
yeah.
I'm talking about. Yeah, but you're right. Like, land borders are like with 12 or 14. I think except the Central Asian republics, which with they did there's some settlement where I think they gave up the border. They have disputed everybody. So now, if you want to have a regional, let's say, currency alternative, I mean, like, who is going to trust you? Like today, Russia's assets are seized by US. Now, if today there's a war between India and China, like if India is transiting the yuan, I mean, like, what if they suddenly say, oh, we are not going to give you yuan, or like your deposits which we you credited in the yuan, like Chinese treasuries, we're going to freeze them. So nobody's going to do that. Now, a return to like a neutral system like Bancor is like probably that was proposed by Keynes in 1944. It's like very hard to. There is various camps. There's a Russia, Iran, China camp. There is a US and the West camp. Then there are like the people in the global South, right? Like India, like most in Africa. They want to just remain neutral. I mean, they don't want to take any sides because they deal with both the countries. So I think like it could happen a yuan based system, but I mean the whole world adopting it in a today's world where there are like all these geopolitical divisions, rivalries, it would be unlikely that any one currency could be adopted, as the next reserve currency.
So let's talk about some non-currency assets, right? And we'll begin with gold. Nirav, do you think that it'll become more optimal in the times to come? And also, I mean, just a question, right? I mean, why not, countries pegged directly to gold and maybe have one reserve currency for a particular region, right? I mean, if you're transacting with Europe or if you're transacting with Middle East or wherever else, do you think, I mean, that would be less fragile? I mean, certainly more complex, but do you think that would be a reasonable alternate?
So what happens is sometimes whenever a country faces like a external shock. So for example, what like say Sri Lanka is facing right now, right? You had the option, you kind of devalue your currency and you get out of it by suppressing your local demand, but then you can boost your exports, etc. Right? So I think so. One is that is the whole problem with like this peg to gold. Second thing is, as I mentioned, like what's a good currency is it has to be a store of value. Like gold has been like reasonably stable, doesn't fluctuate so much. If you look at like just annualized volatility of it, if you just look at standard deviation of price returns, it is reasonably low volatility, right, compared to all other financial assets. So then you can use it as a base. It has to be like a medium of exchange where other people can kind of agree to the price of it. And so now gold is like fairly uniformly mined wherever it is, similar quality. Even crude oil, it has like different underlying structure, right? Like say like Arab crude is different from Russian crude, is different from shale, or like even in the US, Permian basin versus some other is like different qualities, right? So gold is fairly uniform. It is inert as a element. It is an inert element. It doesn't react much. It doesn't decompose. All those things are good, but there's a lot of transaction cost involved, right? So in terms of like it being very divisible, can you like buy 1 rupee worth of gold, can you carry that much? There is like the issue of like checking whether it is, so the worry about it is, can someone sell you counterfeit gold, etc., right? Even for like small denominations, these are like logistical issues. We were in an era where if you go back to like the Roman Empire or old Indian, ancient Indian empires, you had gold coins, then you had silver coins, and then you had like copper or bronze coins, right? So you had like, I think even the Indian rupee in the olden days was like a silver rupee, right? So here, this is a limitation of gold or all these metal based currencies, right? So actually, the kind of like interesting part is when Argentina was discovered. So I think gold to silver used to be like a ratio of 1:8. So in Britain, there used to be, I think, 20 pennies to the pound, and then the pound was a gold coin and the pennies were like silver, but the weight was such that it was 1:8. But after there was a lot of silver found by Spain and Argentina, there was like too much silver out there, and then good money drives out bad. So because there's so much silver, all what they did is that in transactions with Britain, they say, yeah, I'll pay you everything in silver coins, but you give me all your gold. And so these were the kind of complexities. It's much more difficult. The electronic exchange in like paper currency that we have, fiat currency, has been a lot more easier. So these are the issues. Second thing is, I would like to say, for example, India. So just because you're on Bharatvaarta, so India's had like three stressful episodes with its currency. So one was 1966. The Prime Minister Indira Gandhi devalued the currency one third in a single day from some Indian rupee was pegged to the pound that time. And up till then, actually, very funnily enough, there was a currency called the Gulf rupee, where countries like Muscat, Oman, etc., was pegged 1:1 with Indian rupee. So after that devaluation, and then the whole petrodollar thing started, and that's why they said, okay, let's peg to the US dollar. But so that was one case where we devalued our currency because of, and that actually misfired because maybe we devalued too much and our imports were not elastic, they were inelastic. So we have to import. If you are importing oil, we need to import it no matter what. But our exports at that time were like really poor quality goods. And that was just after Lal Bahadur Shastri had died and Indira Gandhi had just taken power. We had just had a war with Pakistan in 1965. And the Green Revolution had just kind of been kickstarted, but not borne the fruits yet, right? So we couldn't export much. So what happened is our trade deficit just went up even more. And the current average common man saw like much higher inflation. So that was one period. There was a little bit nudge in like 1980 or 81 by the IMF where we had our loans restructured, and that is after the whole petrodollar system was formed, etc. As well, there was another shock to India. So that time again, India devalued its currency, and then in 1991, the famous shock. So the USSR collapsed. We used to have a large trade going on with the Soviet bloc, and when that collapsed, their demand totally fell down. So our exports there collapsed, and then rupee was under pressure. I think rupee went from 10 or 11 rupees to the dollar to like, I think, or no, so 20 to like 30, 32, 33 or 35, right? So these are like very quick, sharp devaluation. So India has had three of such kind of episodes, and all of these kind of made us recover back. So at least 81 and 91 made us recover back reasonably quickly. I think that's like the thing where having fiat currency has this advantage, right? That you can kind of devalue your way out of crisis. In like freely convertible currencies, actually one of the most volatile currencies is the Australian dollar. And what has happened is each time, let it be the 2008 financial crisis, or they've had their own versions of crises in the 90s as well, the Australian dollar falls a lot, and then it keeps exporting some commodities, so like iron ore or coking coal. It is a very attractive tourist destination as well. So when the currency devalues a lot more tourists come in versus the number of outbound tourists kind of fall. And similarly, the currency when it in good time it strengthens a lot more as well. And at that time the reverse effect. So it's kind of like a shock absorber. So I think that works quite well. So here, if we go to a gold standard or a gold peg, what happens is that when you have your exports rise too much, then either you have to like ship gold from the other country to you. That can be like an issue as well. Gold, while like it can do, it'll add a lot more friction. And we all talk so much more about like global trade in goods and then a little bit in services, but we should also think about global capital flows. So we see, like, say, for example, India receives foreign direct investments or foreign portfolio investments, right? All those things, when we have like kind of a gold standard, might actually kind of get more complicated or difficult because it's so much easier to transact. And like now, even for Indians, up to a certain limit, you can buy, if you want to, you can buy shares of Microsoft or Tesla or whatever. All those things would become a lot more difficult. So gold, yes, some people call it a barbarous relic. So there are like people who say that gold should be zero, and there are some people, instead of like 1800, 1900 per ounce, it should be 10,000 or 100,000. They are the gold bugs. Obviously the truth is somewhere in between, and the price is also somewhere in between. But gold, it does have its value. But if we all move to a gold standard, so I see like two disadvantages. One is that for easy transactions or whenever a country is under stress, if you're pegged to the gold, what will happen is slowly people will say, okay, here's your money, give me gold instead. So how kind of like Spain did the trade with silver. Two is that actual trade, there'll be a lot more friction because after a point people will say that I don't want your money but give me gold instead, and you'll have to ship a lot more gold back and forth, have more vaults, have more storage. So I think that is an issue. So gold could be one substitute, but it is going to slow down global capital flows.
Mohal, what do you make of cryptocurrency and Bitcoin? Bitcoin, of course, has been in a free fall for the last 6 months or so. I think it's fallen by about 45%. If you ask all of the cryptocurrency enthusiasts, that is what they say, right? They say that hey, 40% of all the US dollar is printed in the last couple of years or so, right? Here is Bitcoin, which is a finite quantity and which is electronic, which is has all of these virtues of a good currency. Why not treat it as a currency? Right. So, what do you make of Bitcoin?
Yeah, so see, like Bitcoin, I mean, I'm just going to talk about Bitcoin, not the other cryptocurrencies. So Bitcoin has like certain challenges and certain benefits. I mean, Bitcoin, I mean, just like Nirav mentioned, gold bugs, there are Bitcoin maximalists, which thinks that eventually everything is going to go to Bitcoin. Now, there are obviously the pros and cons with any other reserve asset. But like one of the main things is, I think we discussed earlier in the podcast, like not the seizability amount, right? Like with gold and Bitcoin, one of the things is like with no one country can seize your asset, assuming you are storing it with yourself. I mean, if you store gold in a vault overseas with with New York Fed or like in London, like it's going to be seized. So anyways, coming back to Bitcoin, I mean, the amount of Bitcoin is on an open ledger. I mean, you can easily verify it. With gold, we have the disadvantage that it cannot be. I mean, you have issues with like, is the purity correct? I mean, did Sendman send you fake gold? I think another issue that Nero brought up was the divisibility. I mean, with Bitcoin, I mean, there are, like, I mean, every Bitcoin is divisible up to 100 million satoshis or sats as they call it. So you can easily, like, I mean, if you're, let's say, if you walk into a coffee shop tomorrow, Starbucks, I mean, you can't just give them a gold coin. I mean, it's not very practical unless you have maybe a fiat currency tied to the gold. But like in sats, you can like buy as much as you can, and as the price goes up, I mean, even even if the like even if let's say the price, I mean, I'm not saying it's going to go to 100 million, but even if it say goes to 100 million, like technically like $1 would still equal to one sat. So the divisibility part also happens. And then also the gold requires the additional overhead of like verification, transport, I mean, security and insurance, right? I mean, if you're transporting gold, I mean, I mean, we are now used to so many gold heist movies, but I mean, if you have to transact large volumes of gold, I mean, it would be like for the robbers or like the people who want to steal it, I mean, it might be a prime source, so you have to have like foolproof insurance and security. So they have all these issues of like which like Bitcoin doesn't have. It's, everything is on an open ledger, like censorship resistant, you can't just ban it. Now I mean, Russia also has made noise that where their politicians have said like that if countries are willing, like they can pay us in gold or Bitcoin. So it's interesting to see over the next few years how it will go. Now, obviously, Bitcoin, one of the challenges always when it was invented, and they we had this famous Bitcoin block wars, like where like the amount of transactions. So the amount of transactions you could see is like, you could have a layer 2 application like Lightning. So there's a Bitcoin main layer, there's a Lightning network. So on Lightning network, you could have easily transact, like, send, because every Bitcoin transaction, as you know, like it takes 10 minutes for a confirmation, and then you could have a fork in the chains. I don't want to go into details, but it could take lot of time too. So you could have an instant transaction. I mean, Lightning network has, I think, is now up to like almost 200 currencies where the transactions could be done in like local fiat currency. So you could upload, let's say I want to send a transaction to you, Roshan, like I could upload like dollars to a Lightning network, it would convert it to Bitcoin, go over the Bitcoin rail, and you could convert it down to rupees in India without any friction or I mean, and it could be like few pennies. I mean, like people like Western Union could be redundant in a few years if they take I mean, like El Salvador, which has adopted Bitcoin as a legal tender, I think they have been using, the expatriates have been using it to send money back home via the Lightning network. So there are like quite a few advantages. Obviously, the biggest downside is the volatility in the price. I mean, so I don't think it's going to be like a unit of account for some time. I mean, technically, you could do. I mean, there could be like a store of value. Obviously, there's a lot of volatility, but if you look at over the 4-year price, I mean, it could be a store of value, and it could be like a medium of exchange, like using the Lightning network. But obviously, the unit of account is not happening. I mean, until the price stabilizes, I think that's the biggest downside I see for Bitcoin. But censorship resistant, easily verifiable, divisible. So I think there are a lot of advantages to it. So maybe once, let's say in 10 years, a decade from now, I mean, like I think people say like Bitcoin adoption is today is where internet was in the mid 90s, right? So we are on that S adoption curve. So if the S adoption goes up, there will be less volatility in the price. Maybe in the future you could have it go down to the unit of account, but that won't happen today. It has to be at mostly a store of value. And to bypass the sanctions, I mean, let's say an El Salvador or even a Central African Republic, which also accepts us as a legal tender, could make some payments like over the Lightning network, in the future, or store the reserves. Obviously they have to stomach the volatility, there is no getting around it. But there could be a future there where some of it could be replaced by Bitcoin, just like with gold.
But El Salvador, the experiment hasn't gone really well, right? I mean, I think I don't know, about 5% of the transactions are happening on Bitcoin as of now, and the transaction fees have also like climbed up pretty steeply, right?
No, I don't think the fees have climbed up. The fees with the Lightning network are just few cents for every transaction. So what they did with the merchants was that in case if you can accept in Bitcoin or US dollars. You cannot refuse to accept Bitcoin. So the people, like, I mean, have gotten their money. So I think it's not used a lot to do purchases per se, but like people are sending to bypass the Western Union fees. I mean, also like people had to travel hours on bus to the main capital to get, and then they could be interdicted by gangs and like people who might take. Now this is like kind of a direct, like in India we have the direct benefit transfer, like it's directly going to your account. So this, they're just bypassing the legacy financial system to deposit it. You can transact, obviously it will take time, that everybody will have to have a, like they think they call it a chivo wallet, the government official wallet, to do transaction. But I wouldn't call it a failure, but obviously it's not like a roaring success, because it takes time, like something as, I mean, for the traditional financial, it's like out of the thing like Bitcoin. So it will take time to adopt it. The main thing is that their investments in Bitcoin, what they put on the central reserve, they have to let it not default on it like for the 4 years. So that's the main challenge. I don't think like the adoption, I think that will take time, but I think it's an interesting experiment to begin, because I mean, see, like the adoption of Bitcoin is not going to happen in a like a Western world, because they have like very stable currencies, like, but like for example El Salvador, like it doesn't have its unique local currency, interestingly. I mean, they have like, they are pegged to the US dollar. So if US prints, let's say 40% more dollars, I mean, they are screwed, because they can't just print more currency. Even like, I mean, interestingly, I just read recently the Central African Republic, the second country to adopt Bitcoin, I didn't know that they didn't have the local currency. I mean they have so they have a group of 15 Central African nations, which are these are legacy French colonies. So their currency is tied back to the French. I forget like what was their currency.
French franc. So they call it CFA franc,
Yeah, yeah,
which is like
CFA.
pegged to the euro now. Yeah, yeah, yeah.
Yeah, with respect to the euro. So in mid 90s, like one day people woke up and it was devalued by 50% like overnight. So these like hyperinflating currencies are not stable. They are going to adopt Bitcoin first. Obviously, let's see if there is more adoption. Like the West is going to come into it at the end, and it's not going to happen overnight. So it's a slow process. I
Yeah.
mean, I'm not a big fan maximalist that, oh yeah, overnight everything is going to go to Bitcoin. Maybe it can happen in the future, but there is obviously the pros. If the cons, like the volatility, I think the main thing is volatility. The volatility, I think, as an asset grows, I mean, interestingly, I mean, someone was pointing out, like, look at Amazon stock, right? I mean, I'm not saying Amazon is a Bitcoin, but like it went up in the dot-com boom, it went down 90%, it went 60-80%. But now if you see Amazon stock, obviously with the stock market crash nowadays, it's gone up down. But like the volatility is like coming as more adoption happens, like like the volatility comes down. So eventually, if it comes down, you can talk about it. But definitely it is, I think some countries are going to adopt it. The main thing is like the Lightning Network. Okay, so the one last point I want to make is like the Lightning Network. So today you cannot have global trade happening on a Lightning Network, right? Because the amount of volume is very little. But as the price goes, I mean, if more people upload their Bitcoin to the Lightning Network, it could be used as a medium of exchange, bypassing like the traditional routes to transact money between the sources. But there has to be a larger adoption and more higher price, so that there is more capacity on the network. Like the main thing, like what Bitcoin anti-Bitcoin people used to say is like the transaction volume is very low on the Bitcoin base layer. But see, the Bitcoin base layer was done not for transaction volume, it was something else. The Lightning Network will help overcome it, that it's a second, or maybe you can have a third layer, like that's for the volume. The other one was for like the censorship resistant decentralized. So that was the main thing.
No, I think multiple startups and so on are solving for that trifecta, right? The trilemma, as they call it, right? Scaling, speed, and trust, basically. Yeah, I mean, we're going to see that
And
the
decentralization.
and
No,
decentralization,
sorry.
or trust, basically,
No,
right?
that brings up the decentralization point. So let's say if you could have like alternate, like I mean altcoins, as they say, like many of them are, the problem is they're not decentralized. So if one entity tomorrow says like, okay, you know what, we don't like you, or you are not in the, I mean, that's a problem with CBDCs, I think, in the future, like central bank digital currency. If you are not a trustworthy citizen, if you're not a trustworthy government, you're not in a good graces, if it's not decentralized enough, it's going to suffer an issue. That's the thing I think with Bitcoin helps, like it's quite decentralized. There is no one VC or founder who can control the supply, or you can't have a rug pull. I mean, a lot of people have lost money with in 2017 boom cycle, in the 2020 when that suddenly the VC disappears with money. So that's also the decentralization, I think, is a large part. But like what we need is like the layer 2, the layer 3s to do the transaction. I mean, sorry, I interjected.
No, no, that's right. That's right. I was saying the same thing, that I think once the L2, L3 layers develop, and the amount of traffic on the mainline, eases, right, we will see faster transactions and more adoption, I suppose, right? So
One thing I want to add about Bitcoin. So the worry here, see, the all these things are fine in like developed countries, and like now, so you look at like, if you look at countries like, say you see emerging market countries where they have some sort of capital controls, and then like what you call El Salvador, or those ones are like, you can call them as banana republics, or like even like, so they're not even frontier. So the main worry in emerging market countries is capital flight, and you are unable to block that capital leaving the country. So countries like India or Pakistan or Sri Lanka, or even like say South Korea or China, they still have capital controls, right? So that's the main worry, and there the worry is that you might kind of block these, because of the same decentralized nature, you might, because you want control, you might actually block them or regulate them away. See, the countries with open capital controls, this is not that big of a worry, because they have enough confidence in their systems that their currencies will retain value no matter what. But as soon as they feel the first sign of fragility in their own, let's say, you see, for example, say maybe people like in Mexico, which is again another convertible currency, if all their money goes to Canadian dollars or US dollars, or all their money goes to Bitcoin, then they could implement some sort of capital control. So that's another worry for Bitcoin, that you could see it regulated, and which kind of defeats the purpose of this decentralized nature. Or if you can't regulate it, you might actually just ban it, or as India has done, is tax it so heavily that you kind of discourage it. So I think that is one thing where, which may not work for Bitcoin.
But I think like with Bitcoin, I think banning it, I don't think will work. I mean, like if you look at the example of Nigeria or Iran, I mean, it's just like I mean, you think like the volume has exploded after that, like it has gone underground. So I think banning is like probably not going to happen. I mean, if you look in the US, there's a lot of, I think what we need is more regulation and adoption, because if it's regulation, there's more certainty to big like high net individuals to invest securely. I mean, see, like with the internet, like I mean, people thought, oh, one day, like if like we don't like, we can censor the information. I don't think it's going to happen. Obviously, the where they could ban it is like the on ramps and off ramp. Like if you convert it to fiat to Bitcoin, that's where you could have like more regulation and maybe banning it, that okay, I can't deposit rupees onto my, let's say in India, I can't deposit rupees into the crypto exchange, I can buy it. But let's say if somebody could take their money overseas or use like a instrument like Tether and like in the overseas market try to buy. So I think it might slow it down, but I don't think it's going to completely shut it down. And I mean, governments will have to deal with this challenge. I mean, no doubt that like Bitcoin and stuff, like they will, it is not going to go away. It is just going to probably grow. I mean, the rate of growth is like the big $1 million or $1 billion question, like how it grows from here.
All right, final thoughts, guys. I mean, so we're living in very interesting times. On many geopolitics episodes, we talk about this whole multipolar world, right? Um, what is your best guess that will happen on the reserve currency front in the future? I mean, Nirav, you could chime in, and then Mohal, you could end things.
Yeah, sure. So I think what we are trying, maybe where we are going to, is probably like a bipolar world again, like how you had USSR and USA, probably China and USA. So it's very simple. You just look at all the countries which have been part of the Belt and Road Initiative. They are the first ones who will kind of, if they have their trade aligned with China, and a lot of these countries actually have a trade surplus with China. For example, you are selling commodities to China, so then you will you get paid in Chinese renminbi, and you don't want your currency to appreciate too much, so your spare reserves you keep it there. What might happen is you'll have like one set of countries which are totally in the US bloc. There might be some kind of like the old non-aligned movement type of countries which will transact with both, and you will keep some amount of reserves in these two, right? But you'll always be very, you won't have that level of confidence. So that is definitely an issue. And so I think this is probably the most common scenario. I think after looking at whatever has happened in Russia, maybe China may not want to attack Taiwan directly. Probably China already is exporting inflation to the US via its lockdowns. So I think it's, you might see like some sort of more economic warfare, or what like Trump did with tariffs on Chinese goods. So you will see more and more of that. you will see trade paths and like trade lines kind of get realigned. So you will see like one block trade a lot more within itself, the other block trade a lot more within itself. So that is what I kind of foresee. I see like, see Bitcoin, you could see like some people adopt it. It could be used to exchange, but then convert it to something more stable later on. Some people are using stable coins that way. You could see some people use it as a store of value or like a speculative asset, like a stock. It's a, you could maybe it's a commodity asset, a storage of electricity. You make use electricity to store it. So it's a more of a commodity asset rather than like a currency because of its volatility. Maybe that changes. So yeah, there is no clear answer. Uh, Probably we see two blocks forming and kind of some sort of a division between the two. And I feel, what I feel is, politicians will say that to hell with foreign reserves. I rather just spend my money instead of accumulating too much reserves, which is a risk of being seized. I expand welfareish programs and get my people to re-elect me for the next term. I think that is what we
More
might see
populism.
going towards. So more populism instead of having stable currency and high reserves.
Yeah, I think I generally echo Nero's views here. I think the recent events have shown that there is no sacrosanct reserves. You are in, like, like, I mean, as George Bush once said, like, either you are with us or you are against us, like famously, like after 9/11. So I think like a bigger nation could use the threat of sanctions to like kind of mold the behavior of a smaller state. I mean, they could seize their central assets. So like I think a lot of countries, I mean with Russia you have seen that, I mean you've seen with the European nations, I mean they were not wanting to pay in rubles, but eventually they have been forced to, I mean some extent, to do that. I think to Nero's point, I think I agree completely. Like there's going to be a multipolar. I don't know about bipolar, but I would just call it a multipolar. Just like with geopolitics, if we are moving to a multipolar world, I think there'll be a payment system. So maybe the Chinese and it's like friendly nations to them, they might transact in yuan. You could have Russia, I mean, sorry, the US and the West transact in dollars. I mean, you could have, let's say, El Salvador and some other countries, maybe they could have Bitcoin as a thing, which is not seize. I mean, you cannot seize and censorship resistant. You could have Russia. I mean, Russia has the largest resource. I think they have like 130 billion in, I don't know what, depending on the gold, I think over 2,300 tons of gold. So they could have like maybe a gold back system, maybe like I mean, some people have speculated, I don't know how much like this would happen, like a commodity backed currencies. You could have like, let's say, oil producing rich, the Gulf nations. So you could have these various camps. And I mean obviously it's going to be a challenge, like if somebody like India to deal with every of the camp, like you do we need to have some Bitcoin, do we need to have some gold with Russia, do we need to have some dollars with US? So I think it's going to be a multipolar world. uh, I think I can say for sure, I mean, as I wrote in that article recently, like I don't think US is going to be the unipolar reserve currency in like by the end of this decade. Now some people say, oh, are you saying like dollar is going to go into zero? No, no, no. I mean, dollar is not going to go zero. I mean, but I mean, people can see the writing on the wall. I mean, you're seeing like the legendary investor from Wall Street, like Stanley Druckenmiller, said like, US, he doesn't expect the US to be the reserve within 15 years, but I think it's going to be much quicker. I mean, just like how volatile this decade has been. I mean, you could have pandemic, inflation, supply chain crisis, geopolitical crisis, everything like compressed into. And I'm just joking that we had the money printing of the 40s during the World War. We have the 1920s epidemics. We have the 70s stagflation. We have the geopolitical crisis of the early 30s before the world went to World War II. And you had the geopolitical tensions of 1950s, right? When US and Russia, like, I mean, now you have US and China. So, like, you have, I mean, I'm saying it's going to be one hell of a ride this decade. So, everything is going to get compressed. So, like, these transitions, some of these are going to be shocking to people, like, I mean, when they're coming. But I think by end of this decade, I think US won't be the unipolar reserve currency. We'll just have like various set of blocks. And I think like gold and Bitcoin like will have some say in it, because of the censorship resistant, just because of like what the moves have been done. I mean, like China, I mean, as you rightly said, I mean, they are looking at Taiwan, like, I mean, they could go for Taiwan any day, but like they want to secure all the reserves. I mean, interestingly, China's $1 trillion in US treasuries, right? So I mean, they could want to diversify and sell it again, just like Russia. Russia, interestingly, since just before the Crimea crisis, they have sold all the US treasuries. They hardly have any US treasuries. It's mostly gold. So like, I mean, countries will diversify out of US to like more neutral assets, and we are going to have a multipolar currency world in the future. I mean, it's going to be an interesting next few years for sure.
Yeah, just to add one point I missed. I think what other change will happen is, say, oil might continue to be priced in US dollars. That you'll say, okay, the price of oil, what is the price of oil? $105 a barrel, $110 a barrel. But how do you transact with it? So, for example, India can buy oil from Russia in rupees, converted at the prevailing rate of US dollar to rupees. So, there's no need for dollar payment. See, this might happen faster. So,
Yeah.
China can buy oil from Saudi in Chinese yuan, price is set in dollars, your contracts are in dollars. On the day's prevailing rate, I sell you, I transfer Chinese yuan. So what happens is both parties don't need to keep like a spare cash USD
Mm-hmm.
balance.
Mm-hmm.
So what
Mm-hmm.
happens is the total amount of overseas dollar balances can come off a bit. So I see that happening first instead
Yeah.
of
Yeah.
like a complete change in the thing. As you said,
Yeah.
see, we overestimate change in the short run sometimes in like technology as well, and maybe we underestimate it in the long run because yes,
Mm-hmm.
over a period
Mm-hmm.
of time, massive tectonic shifts can happen. So I
Yeah.
think this is the change which I foresee happening soon enough.
Yeah, I agree. See, like, I mean, to just to extend your point a bit, I mean, let's say if you use like, you could use the prevailing rate of gold, and Russia could say, you know what, just give me enough gold to whatever amount of ball, and the price will be set in dollars. Or like, let's say in Bitcoin, like, let's say El Salvadorian wants to send money home, right? So in Bitcoin, what it does, they're not buying Bitcoin, okay, by the way. They're just saying, okay, I deposit dollars in a Bitcoin Lightning wallet in US. It gets converted to Bitcoin, goes over the lightning rails to El Salvador, and his relative gets it back in like dollars. So it's the Bitcoin is just used as a rail. So like gold or like to your like rupee, like the rupee account, like you say like to transact with you Russia in oil. So I think that is going to come up much faster than like everything priced in a neutral asset.
Yeah, well, the possibilities are immense, and good that we had this discussion to talk about whatever is on the table. Thanks, Mohal and Nirav. This was a fascinating discussion, and maybe we should do a follow up sometime, given how quickly things are changing as well, right? So thank you again, everyone, for tuning in, and look forward to seeing you guys on another episode of Bharatvaarta. Thank you.
Thanks, Roshan.
Thanks.
Thank you for tuning in to this episode of the Bharatvaarta podcast. If you want to see more content like this, then don't forget to subscribe to our channel. We started Bharatvaarta to facilitate long form discussions on politics, policy, and culture. We don't necessarily endorse anything that was said in this episode. If you wish to offer us feedback, do reach out to us on social media. We are at Bharatvaarta on Facebook, Twitter, and Instagram. You could also get in touch with us on our website www.bharatvaarta.in. The links are in the description below. Until next time, stay safe, take care, and Jai Hind.